Wow. Okay. Today, end of market review for today. That's what I'm about to get into, right? So, this is Friday, 24th of March, but I'll be posting this video on the 25th of March because I've been making mistakes with the dates. So, I'll just keep posting the videos the day after. So, I'm always filming like when it's very close to midnight. So, that's why I made mistakes with the dates, right? But it's all good. So on this will appear as like the 25th of March, but this is actually Friday. So last day of the week, let me go back to my second chart where we actually price action and try to like where I'm looking at price action, trying to figure out what happened, right? Um, hourly. Let's look at the hourly. Let's go by the hourly time frame together, right? So in previous videos, I was making mention of like how price is bullish, right? Like how the daily bias is bullish and all of that. But you can see that on Friday we had bearish price action, right? Same price coming to the downside. So obviously trying to predict the market or predicting the day or the time in which it's going to run certain liquidity pools is basically not on my skill level. I'm not there yet, right? So I always try not to make predictions. I just look at the charts, look at what I can see, what I can find, and then I go about my day, right? After the strategy I'm trading, right, doesn't require me to have a daily bias. And that's really, how do I put it, liberating, right? Because I'm not trying to catch those big moves. Just I'm looking for basically very little intraday moves with that strategy, and it's not a high percent winning strategy. For my back testing, we got like 50%. Live market conditions could be totally different because if I hesitate to make my trades, you know, and depending on the month, depending on how price action is for the month, you can never tell, right? So I'm actually testing my strategy out to see if I have an edge. From the previous testing, right? I've done previous tests of my strategy, right? And it showed me that I have an edge, but I was trading differently. So a couple of things I was doing differently was I was trading, how would I put it? I was trying to get like like 3 hour trades, 4 hour trades, 5 hour trades, and I'll be partialing out, right? So I'll be taking partials below certain lows or above certain highs, right? So that was how I was doing it. So I'll partial out, hold trade to and hold some positions. So that actually gave me an edge, and I was able to make like when at the time where I stopped, right? I was able to make 2%, right? So I was up 2%. The highest I ever got to was about 3% or 4%. Yeah, 4% thereabout was the highest I ever got to in profits. I also went into drawdown with that strategy, but still came back up to about 3% and then back to like 2% before I made that withdrawal on the demo account, right? It's a demo account, but it's a $200,000 demo account. And the reason I'm trading a $200,000 demo account is to get used to it, right? So it feels normal. So when I eventually get funded, right? When I eventually get funded and I'm trading a 200K funded account, I know how to manage myself, manage my emotions, and actually be used to those kind of figures. So that's what I'm currently doing. So currently now I'm taking the next 20 trades, right? So my strategy now, before, like I just explained, right? I was trading the same strategy. I was trading the same strategy, but I didn't have like this strategy now that the way I'm trading now, I've kind of like fine-tuned a couple of things, but it's still with the same strategy. So from the previous strategy, right, I was trading like I could trade like 2 times in a session, 3 times in a session, right? That's I always trade New York session after 2:30, right? So Previously, I was taking like 2 trades, 3 trades, and that was actually like, I don't know how to put it, but I was just testing, right? I was getting the experience. I don't want to say I did anything wrong, right? And I believe if I hadn't done certain things, I wouldn't have made certain adjustments. So let me not say I did anything wrong, right? But I've fine tuned the strategy, right? I've reduced my risk to reward ratio to just 1 to 2. So even if price is not going to take out that high, 1 to 2 is 1 to 2, right? That's how I'm doing it now, and it's like a set and forget. But I always sit at the charts and observe, right? I don't set the trade and actually leave. But like, it's based on a set and forget model, right? So that's just that. So what else did I want to say? Yeah, so those are the changes I've made to the strategy. It's the same strategy, but like, I've made new rules concerning that. So back to like what happened today. Today we saw down movement, right? For Friday, right? This is the high of the week, Monday's high. So price did not run Monday's high. This is Thursday's high. Price did not run Thursday's high, right? But something that we saw like in London session, there's a setup that I saw in London session, and I was able to observe that, right? So we have another block here. So let me take price back a bit on this hourly time frame. This is not my trade. This is just something that I saw, and this is an ICT concept as well, right? It's an ICT concept as well. So when I saw it, I took note of it, and this is something that is really beneficial for me. Like, as I'm studying ICT, if I get to see patterns play out, like, I actually understand what happened, and I understand the session it happened in. And when you observe these things over a long enough period of time, then you can actually start to maybe want to build a strategy or want to use it in the live market, right? ICT made mention of this. Don't just rush to trade live. Don't even rush to trade on a demo account, right? Because you want to really detach from the outcome, and the outcome is making the money. You really want to understand what's actually going on, right? So if I drop down to the 15-minute time frame, you can see this down close candle. Let me go back to the 1 hour. I don't think I explained it real well. But like, this down close candle here, before price made this huge impulsive move to the upside, this is what is another block, and you can see I pulled this red line up across it. Other block. Lower time frame, right? You can see what happened here, right? You can see that the other block is this red line here. You can see this low. Price made this low, right? It did not tap into the other block. It made this low and decided to push up, right? It decided to push up. What's going on here? When price pushes up like this, right? This is price pushing up, right? Okay, good, good, good. Now what happens? Look at the speed with which price drops into this. This is 9 o'clock. 9 o'clock London open. This is 8 a.m. London time. 9 a.m. Nigerian time, right? What happens then? Price drops down. Boom, boom. Two big black candles, two big bearish candles, right into the other block, right? Takes out this low. What's below this low? Sell stops. Sell stops. So if sellers step in here, and this is another misconception I used to have when I used to hear like sellers coming into the market, I used to think it was retail sellers like myself and yourself, but it's not. It's actually like institutional traders, big traders, banks, all those people, right? They are the ones running all these stops, right? When price breaks this low, big banks sell here, right? They are the ones even running their own liquidity. It's a complex topic, but like, if you watch ICT and if you listen to ICT there, maybe you understand it better. I'm not in the position to explain it very well. But basically, is if you if you've heard of liquidity or any of those kind of things, right? It's not about traders like small traders like myself and most people out there, right? It's between the banks, smart money, all of those things. So this is what ICT calls the turtle soup, and he made mention that London session is a session where turtle soups happen a lot, right? And just getting to see this happen in London session, right? Turtle soup into the other block, right? This is a good trade entry, For those people, there are people that trade this model, right? This is not the model I trade, and I don't even trade London session. But I was by the charts and I was observing it and I saw it and I took note of it. So that's good. That's good. That's part of the learning process. So if this was a model I was trading, this would be my entry. My stop loss would be below the order block, and I would be taking profits above this high. Right? First profits will be above this high. Second profits above this high. Third partials will be above this high. Fourth partial would be above this high. Or you can just have a fixed risk to reward like 1 to 2, right? And just trade depending on what you want. So another thing ICT made mention of is when you're in a trade like this and you're holding, maybe say you're holding for this high and you see price make a swing high here, pull down. Once price pulls above this high, you want to collapse your trade, or you want to take like a major portion of your trade off, because redistribution happens after a high is taken. So the market reads this as, right, when this market starts to drop, sellers step in again, not just retail sellers like you and I, right? Like major sellers step in, and then when this is, then buy stops have a run. So you want to take everything here. But I'm wasting too much time talking about something else. But for anyone who understands the concept, if you want to learn more, go to Inner Cycle Trader, go to his YouTube channel. Let me go back to this chart and let's go over my own trade. All right. So for my own trade, again, you know how it goes. I'll just quickly explain. So today we had a winning trade, finally. Right? We had a winning trade. So we've had 2 losses, 1 win. So 2 losses minus 1R minus 1R, that's minus 2, plus 1 win, we're back at break even, basically. So I'm back at break even on my account. So let me move price back so that I can show you my entry. So 230, obviously, right? You can see that. Something else we had was this, something else that gave me like, something else I used today was like psychological levels. As you can see, I have 20,000, 2,000 marked out, right? So gold came into this price level, this psychological key level. You can see where it ran above this high, right? You can see price came into 2,000 today, ran above it, came back below it, had another touch into it, had another touch into it. You can see the highest point it made, right? 2003. Price never got back there. And when I was looking at this, I was like, psychological levels are big for gold, right? Gold is big on psychological levels. This was 1, 2, 3, 4, 5, 6. After 230, when I saw this big bullish candle running here, boom, I was like, man, gold could really do something though. Gold could really respect this 2000, right? Gold could really respect this 2000 key level. And we have lows, right? We have liquidity is resting below these lows, right? So this is not me doing any analysis or any sort of thing. I was just pointing out what I was saying, and I was on the charts for a long time. So like when I'm on the charts for a long time, you can get in sync with the market and stuff like that. But back to our entry, back to my model. I still traded my model, 1, 2, 3, broke this low. 1, 2, 3. You know how we do the fair value gap? A candle in the middle, one, you see the gap, boom, and then the third candle, right? I marked out the high of this candle. When price came back to the high of this candle, that was my entry. My stops were above this candle. So this was my trade, right? Very simple trade, executed at 239, 240, right? Again, my kill zone is after 230, right? Found my entry, took my entry. Very simple. Very simple. You can see price came against me. Price came against me. I was still holding. Why? Why did I hold? Because like I've said multiple times, right? I'm risking 1% for 2%. I'm trading a simple strategy. I expect to be wrong. I'm not going to be right 100% of the time. I'm even saying it out here like my strike rate is not that high. It's not like 70%, 80%, all those things that people claim to have. My strike rate from my back testing is 50%. If I back tested this strategy and it shows me, okay, you can have a 50% strike rate with this strategy, that's fair enough. All right, that's fair enough. Now, forward testing. We do back testing and then you do forward testing. So this is me forward testing, me actually being in the market live, in live market conditions and executing trades. That's forward testing. Back testing results could be different from the forward testing results. So I've back tested 20 trades, right? I've backtested 20 trades. Now I'm forward testing 20 trades. Of the 20 trades, I've taken 3 trades. Out of the 3 trades, I've lost 2 and I've won 1. What is the outcome so far? Break even, 0R. Right? So by the time I take the remaining 17 trades, I'm expecting to have a positive result. This is the mindset you need to be approaching trading with. Don't approach trading with the mindset of I have a very powerful strategy. This trade is the hot, this trade looks good, this trade looks good. You're approaching it with a gambler's mindset and you might be forced to like put all your money or all your eggs into one basket, right? Yes, my strategy is it works, but I can't pick this trade and say this trade is going to be a dope, this trade is going to let me risk like crazy, right? That's the get rich quick mindset, right? So no matter what strategy you are trading, group your trades into sets of maybe 10, 20, and be like, after 20 trades, I'm expecting to have a positive result, a positive outcome. That's exactly what I'm doing. My strategy from back testing shows me that after 20 trades, I stand the chance to have a positive outcome. And that's the same thing I'm doing forward testing. I'm forward testing to see if I can get, if my edge will play out. And if my edge plays out, then I can say, okay, this is something I can work with. It doesn't mean start risking big. No, it means I have something I can work with. And when you have having something you can work with is so much better than having nothing in this market because you want to survive before you thrive. And a lot of us just come to the market expecting to just make it big in the first year, in our first year, and that's when we just keep risking and risking and risking and we keep losing and losing and losing and losing because we're not approaching the game in a smart way. We're not approaching it with any strategy, right? We're just playing around, basically, fooling ourselves. So you actually have to be very, very smart. So trade hit TP plus 2R, 17 more trades to go, right? 17 more trades to go. And I urge everybody out there, like anybody that watches this video, man, like if you have a strategy, try to back test 20 trades, look and see if you have a positive outcome. If you have a positive outcome, then you want to forward test 20 trades, see if you have a positive outcome. If you have a positive outcome, then you want to take that to a demo account, forward demo trade 20 trades, see if you have a positive outcome. Then you want to go to a live account, a small live account. Don't focus on profit, just focus on taking 20 trades. See if you have a positive outcome because when you're in a live account, then like emotions can come up. What you want to do is you want to use logic to defeat emotions, right? Because you know you're just taking 20 trades. Your goal is to take 20 trades. Your goal is not to make money. Your goal is to make 20 trades. Your goal is to take 20 trades. Execute 20 trades. Your goal is not to make money. Your goal is to execute 20 trades. That is the goal. That is the goal. This is this thing that took me a long time to figure out. I've been training for 4 years now, and I have never known that the goal was not to make money. The goal was to execute the model. The goal has always been to execute the model, not to make money. If you execute the model over a large enough sample size, then you can expect a positive outcome. This is it. This is trading. That's just what it is. I'll see you guys in the next one.